Crypto Hotep here with another investing video. We're on week 27 of the Family Portfolio Tracker. If you're unfamiliar with this concept, feel free to go to the channel, look at week 1, where I discuss my whole methodology and why I'm doing this. In a nutshell, I gave my family a short list of stocks for them to choose from. They chose the ones that best fit their feelings and their wants. We then used M1 Finance as our broker of choice to allocate those stocks into each of my family members' pies, is what we call it in M1 Finance land. Each pie has its own collection of stocks, and then this whole pie collectively is the family portfolio. Every week we go over the family portfolio, discuss the holdings, discuss the market, discuss the ups and downs, where we are in terms of the sentiment, and if we need to decrease a holding, why, or buy a holding and why. These videos are for informational purposes only, not financial advice, so please do your own research before investing into anything. These are more for educational purposes for me and my family, and to also track that investment journey. Hopefully my family will see these videos when I'm gone, and they will educate themselves as well as that future generation as well. But if you find them helpful at all, feel free to like, subscribe, comment, do all of that. That being said, guys, we'll jump right in here. So before we go to week 27, we always look at week 26, refresher, right? So our balance was $855.89. Our market gain was $56.48. And then our weighted rate of return year to date, it dipped down to 12%. That's because of that sell-off, that light sell-off we had. So let's look at this week. This week, we're a little bit boosted here. We're closing in on $900. This is fantastic to see. As you can see, when we first started these videos, we were about at I would say like 166, 167. So we're at $893.46. Our market gain, again, boosted $79.12 with a weighted rate of return year to date for the family portfolio at 16.22%. You love to see it. Let's go into that activity. What have we been doing today? So between last week and this week, we have had some dividend activity as well as a stock split for Cintas. Okay, so we had Moody's, which paid out 3 cents, ExxonMobil 6 cents, Johnson & Johnson, one of the goats in dividends, 16 cents, Chevron 10 cents, Target 17 cents. Now, if you're looking at these and saying, hey, these are pennies, Crypto Hotep, this isn't big money, you are correct. But again, this is a small account. You see where we built the account off at on the balance side. The balance in January, February, when we first started these videos, is around $165. We built that up, and essentially we built up these positions, or will be building these positions up in dividends, which will also increase as our holdings increase. It's kind of like that snowball effect. Now, the Cintas stock split, we've had these with NVIDIA in M1 Finance. So essentially, Cintas stock price will go down because they split the stock. And so M1 Finance does all that work in terms of rectifying the shares and obviously giving you the correct number of shares for that. We also get a dividend payment of 2 cents from Microsoft. And we did make some buys today. So we got into the market. So we did buy some Starbucks, Costco, Coinbase. Coinbase was mine. I did want to buy Coinbase today because it was down. Celsius, again, if you've been following this channel, you know who owns Celsius. We'll get into that. And then Nintendo. Okay. And we'll also go into the holdings really quickly. Nothing has really changed from last week in terms of that. We did have a slight increase in our unrealized gain, so up over 9%. You can see our cost basis right here at 818. The value is at 893.46. Now, the dividend income, again, some of this has been paid already. Total income for the year, $11.52 from a small account. That was, half of, more than half of $300. That's pretty good. We're doing okay here. So Again, this is a great tool, NM1 Finance, which shows upcoming dividends. It gives you that ex dividend date, the actual pay date, the number of shares you have, the dividend per share, and then that quote unquote payment amount here. Okay. So nothing really has changed from last week because I did go over this last week. So we can go to the portfolio and we'll jump right into those stocks and those holdings. We go bottom to the top here. So at the bottom, my wife, unfortunately, again, is at the bottom. But I will say this, as you can see, my wife was one of, I would say, the top balances up until that top that Celsius reached. It was in May, towards the end of May. And then you can see price somewhat cascaded down for her balance. But I am pretty encouraged, though, only because price seems to have leveled out here with her stock. So we'll see what's going on. So weighted rate of return, we're down 33%. I know that's staggering for stock enthusiasts, and they're saying, oh, crypto hotep, why aren't you selling the position, getting out and doing something else? Well, Celsius Holdings, I should say, that beverage company, the fundamentals look very strong with this company. I just think it's very cheap right now. So again, we're just going to keep buying it. We're down on Celsius alone at 69%. I'll tell you one thing. When I tweeted this week, was I was so glad I learned crypto before I learned the stock market, because during these dips, most of these dips aren't that bad. Because if you've been in crypto a long time, you've seen a massive close to 70% dip, 80% dip, and almost 90% dip. So again, we're going to keep holding, we're going to keep buying too, as you saw. So Pepsi up over 7%, Google up over 1% here. Not looking shabby for the other two. Okay, let's go to our middle. Our middle is in the double digits for year-to-date return at 10.93%. Had a little dividends there at 18 cents. And this is a very, very consistent portfolio for our middle. There's really, and I say that because it's not really like exciting in your face, but that's a great thing because the gains and the rate of returns are consistent. So we have Amazon, great company. Costco, fantastic. Nintendo, you can't hate on Nintendo. Target, and then Starbucks. Again, Starbucks was counted out at some point in time this year. Guess what? They're closing in, or will be closing in, close to $100 again. So again, we were buying Starbucks when it was low, when everybody was fudding Starbucks, just it's over, get out of it. We held strong to Starbucks. They switched up their management with Starbucks, and I think they are getting on the right page right now. Okay, our oldest is at a 21% weighted rate of return. Fantastic. A couple dividends here, 56 cents. And as you know, we keep it simple. Right? McDonald's, Apple, Costco, fantastic companies, all double-digit greens. There's nothing more you can say. That is a fantastic 3-stock portfolio. Okay, to me. Our youngest, let's check our youngest out. Our youngest at a weighted rate of return of over 27%. That weighted balance, or I should say that balance, up over $106. Tremendous. Nintendo up over 1%, similar to our middle. Tesla carrying the workload, up over 40% on our position for Tesla. Up over 25% on our position for Apple. And then Starbucks, again, we were buying when it was red, up over 32% on Starbucks. And last but not least, we can look into my stocks. Let's see what we got here. So my stocks, weighted rate of return up over 14%, which is good for me. Dividends earned year to date, $5.83. I love to see that. And this may be a first. All of my sectors, from technology down to even meme stocks, is in the green. This is a fantastic view right here. I love seeing this. I love it. Literally everything's in the green. I think the memes are being held up by Palantir. Palantir, very great week for them, make it into the S&P 500. It's fantastic. Yep, as you can see, it's not a big position, right? It's $1.85. However, I typically don't look at that. I look at the actual gain in return because I'm like, okay, if I can make 46% off that, all I really need to do is get that capital up for that. And so it's a thought process with mine like, hey, you can select these stocks, you can hold them, and good things will happen. DT is doing some things up over 11%, and then CrowdStrike still bleeding out here on that rated return. Let's see what we got here. Let's look at consumer staples because that's a similar process that we went over last week, just being slow and steady. I consider this my slow and steady sector for consumer staples and shopping, where again, it's not exciting at all, right? It's Procter and Gamble, it's Walmart, it's Costco, it's Target, Clorox Company. But at the same time, these companies have been well established. They do give dividends. And as you can see, the weighted rate of return is up over 10% alone for this sector. Okay. Technology, we're up over 8%. Most people will think that's good, and I do too. Typically for technology, we usually see around like 10%. The reason being, Coinbase is down over 35%, which that's a fantastic buy for me. And then we have AMD down over 25% as well. Okay. All in all, you have Broadcom. Broadcom's up over 27% here. They did have good showing this week. And then NVIDIA up over 31%, right? It's funny because the CEO just reaffirmed the AI industry and how prominent it is, and that just boosted NVIDIA stock like nobody's business. Apple, you never bet against Apple. That's one of the rules that I found in the stock market, and we're going to keep buying Apple. Okay. And yeah, just a very good position that we have in our family portfolio. And again, guys, investing takes time. I believe we started these videos in February or around February, and you can see, these balances were, I think we said 167. It might have been 200 or so. We're closing in on almost $900 before the end of the year, and this was just putting money in very small amounts. And we'll show you the funding history here. So as you can see here, you can see for 2024, there's only been $662 here in the funding side. Now you can see, we'll see. I wonder if I can, we'll go here, here, and here. So we'll just go to deposits and withdrawals. As you can see, it's only been $15. That's it. And you can get started very, very easily with very little money. So I think we started around February potentially. I think we started around February. But again, these amounts aren't staggering amounts. These are just $15, and this is almost every 2 weeks, as you can see as well. So very, very manageable for somebody to do that maybe don't have a lot of money. They don't have a lot of starting out capital, and they think that you need thousands of dollars to begin. No, you can just build your $1,000 from that little amount of money there. And then with that being said, guys, we will cut this video. I'm trying to stay below 15 minutes for my videos here. But as always, guys, if you like the video, feel free to like, subscribe, comment. Let me know what you think. And as always, thank you and happy investing.